yesterday. So we wanted to bring you back. And the mover du jour is Ford, not Tesla, like yesterday, down 18%. What happened? Does it deserve this kind of drubbing?
Yeah, I mean, it's similar to what we saw with Tesla. You had a big run with Ford and GM into the print. But now since the results, what you saw was something that really scared people, which is something that people have been waiting on for years to happen, which is finally the pricing to kind of capitulate. And we did hear that narrative happening potentially in H2 on their ICE vehicles. That's a big problem, right? Because it drops completely to the bottom line, to their EBIT. And that's, I think, the narrative why it changes. Because the stock ran so far into it, and the commentary that pricing is finally falling. They didn't raise guidance. Everybody kind of thought they might. The other thing I'd note is capital return that you saw that GM has been doing and has done. You're not seeing it from Ford, not seeing it from Stellantis. So it's really that, like the fear that pricing is about to really come down hard. Inventory levels for Ford and Stellantis at 94 days. Inventory it should be around 50 to 60. You got a bunch of dealerships with a lot of cars on stock. And the fear is they're going to have to discount them heavily to get them off.
Is that what you predict will happen? What kind of price decreases are we looking at for the industry and Ford in particular?
Yeah, I mean, they said that it could be like 2% price coming down. That seems like it could be reasonable, but the worry is not just this year, but what happens next year, right? I mean, pricing is up 35 to 40% since 2019, going to 2023. That's a lot of inflation. You also have affordability questions, high interest rates, which impacts the ability to buy a car. That a Jeep Wagoneer, for example, it's like $100,000+. It used to be 20 grand less. It does beg the question of people really willing to pay these high prices.
Hey, Tom, one of your competitors, Morgan Stanley, who's been dead wrong on Ford, I might point out, says about Tesla, if you strip out the ZEV credits and downstream dealer services, aftermarket revenue, Tesla's underlying EV business currently not profitable on their estimates. And then goes on to raise this question that I'd love you to answer. Are we sure the EV business, broadly speaking, is a value creator? What do you think?
Yeah, that it's interesting. I'm kind of glad my audio cut out yesterday because I did a lot of calls today, and people are getting more actually constructive on Tesla. So I have some stuff that actually can talk about that's interesting. Regulatory credits, people are actually looking at this as, why does this have to be something we X that out? There's an EV slowdown happening. So other OEMs are needing credits, unless Trump undoes the credits, which I don't think happens. It looks like this is going to be a part of this business, going forward. And the other thing I note is, battery prices are coming down. They're going to produce their own 4680s domestically. I think the IRA is here to stay. So fine, maybe underlying may be getting worse because pricing is coming down, similar to what we talked about with Ford, et cetera. But they're getting benefits from credits. They're getting credits from the IRA, a lot of credits, both on making batteries and the $7,500 that goes to the consumer. So I don't think we should just shortchange them and to X out all these things. Maybe these are something that should be structurally considered underlying for just the car business. And we haven't even talked about the other businesses, right? Energy storage and FSD, et cetera. And those, I think, could be something that brings margins actually up next year. Everyone thinks that margins are coming down. That may not be the case here.